Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. This is our forex-technical-analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. Before we pull up our video, we always want to start off our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. You can lose all of your money. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. As we said, this is our forex-technical-analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. In each video, we look at the prior session's price action to come up with key support and resistance price levels. We'll review the gold chart to come up with leading sentiment. We'll try to create a low volatility and inside bar watch list, and we have an education spotlight at the end. Please send your feedback and comments to contact@dmbfx.com, and let's head to the charts. As we look at the week that was, we see a couple things. First of all, we had the third consecutive month of missing the job numbers, which is going to increase the pressure on the Fed to take action. Now, of course, the Fed never took quantitative easing off the table, but missing the job numbers for 3 months in a row is going to increase that pressure. And next week, we have Bernanke testifying to the U.S. lawmakers about the economic outlook. So, of course, the question is, what more can they do? Are they just going to pump more money into the system? I saw something kind of interesting yesterday, or maybe it was this morning, where they're saying how, they loan money to the banks at 0% interest, but they won't do that to the states or to counties, and so maybe that's something to consider. But in the end, more pressure, as the job numbers were certainly weak on last Friday. Similarly, we have the continued deterioration of the Eurozone. Last week, we heard rumors about whether or not the European Central Bank was buying Spanish bonds. It was announced that Spain is unlikely to meet its fiscal target of 3%. There's yet another Greek election on the 17th, and there's some type of blackout. And for the month of May, we saw the euro drop 6%, and the unemployment in the Eurozone is 11%. So the question is, are they going to start kind of easing? And we're starting to see even Germany, which has been against all of the spending and creating of money, starting to loosen up its rhetoric. And so that kind of goes to what we're going to watch for next week. We have three key banks reporting: the Bank of Australia, the Bank of England, and the European Central Bank. Specifically, those last two, are they going to say anything about more easing? Are they going to say anything about stimulating their economies? Is what people are going to be watching for. And of course, as I said, Bernanke testifying to U.S. lawmaker, if he says anything, although he's always guarded in his testimony, but if he says anything, especially if he implies more easing, that may boost the market in the States. Let's take a look at some of our market sentiment leaders. We like to look at the dollar, gold, and crude oil to see what they're showing us. Inverse relationship with the market, the dollar and the market. So as the market had a horrible month, look at the dollar's month of May. Matter of fact, we'll just go ahead and put out and let you zoom in on that, and you can see how great the month of May was for the dollar. Now, one of the things we showed you last week was this 83 resistance, and even though we rushed right up to it this week, it did hold up as resistance. So again, some people say, why do you draw those lines? This is why, because we need those points of reference. We need to know where value is. We need to know the context of the market, and we're going to talk a little bit about that in our education spotlight. That being said, we made our move up here. We talked about this last week. We made our move up to it. It is resistance. So we'll see if we can close above it and make that resistance support. But the dollar is definitely bullish. Gold, strong dollar. What does that mean for gold? Well, gold has been weak except for Friday. So gold was hitting its 2012 lows and really consolidated in there. And then Friday just took off on Friday. Look at all this move here on Friday. But where it closed on Friday, you can see in the past couple weeks, this has been what was support, will probably be resistance for us. Before we can get up here to 670, we need to get above this 1630 price point. And then, woohoo, nobody's talking about it. Everybody wants to blame the president when gas is high and what he couldn't do. Now notice nothing's really going on, and now crude oil is all the way back to 2012 lows. And nobody's saying, oh, he's done a great thing. And you guys know I keep politics out of it, but it's interesting. But most important thing for our pocketbooks is that gas is cheaper. Zoom out for 1 second, and just so that you can see where we are in 2012. We've got this $80 support level that we're watching, so it makes sense for us to go down and test that. But $80 is, even though we have some wicks below it, that's where support really starts to come in. So definitely sideways to down really. The only reason I say sideways is I think that we're going to find support here at 80 for crude oil. As we start off by looking at the daily chart for the euro dollar, we see just the market really just tanking off here. This past week really sold off. Once we broke this January low, we really have sold off pretty hard here. Clearly we're oversold. As far as targets of where we may be going, I'm going to go all the way out to the monthly, and we can see that overall for the past several years the 200 moving average has been the ultimate support for the euro dollar. So as we get down here to 1.2028 here, we may start to see buyers come in and try to find value here and defend that 200 moving average. Moving on to the pound dollar, some similar weakness, not quite as weak, but similar weakness. Again, looking at our daily chart here, and we can see we're looking at the wicks here, and right now that's right where we are. So this is a perfect example of how the buyers found value and defended 1.52675-ish here, and trying to bounce a little bit. We're clearly oversold, but again, what's going to happen with some of the banks, Bank of England reporting this week, that could give us something to say about this. I mean, we told you several weeks ago, once we broke 1.5626, watch out. We broke that this week, came all the way down to the January lows, and we'll see what happens from here. We'll finish off with the dollar franc. And here we're seeing the exact opposite here. Once we broke out of this downtrend channel, we really took off here and broke up to the upside. And what we did is we went out to the weekly to try to find where our potential target is, and that's where we found our target at this, basically around 1. You can also see the 200 moving average coming in here also. So it seems likely that we may try to weak up there, but of course anything is possible. As we come to our watch list, we first start off with our low volatility watch list, which is our 1 hour time frame using Bollinger Bands, looking for that consolidation and channeling. Right now we're looking at the Aussie dollar to see if we can get a breakout, preferably in the direction of the trend. The inside of our watch list, looking at today's range comparing it to the previous days, we do not have any candidates. So in our education spotlight, last 2 weeks we talked about why traders can't follow rules, and this week we're talking about the mental traps that you have to avoid to be a successful trader. And the first one there is loss aversion. Too often when we make $1,000, we're excited and we're happy because we made $1,000. Yet when we lose $1,000, it feels like $10,000. So we take more pain, we feel more pain emotionally and psychologically when we lose than when we gain. Instead of understanding that this is a business, you have to treat it like a business, and that a trade not working doesn't mean you're wrong. It just means that it's the cost of doing business to find out if your setup worked. You should have backtested your system so that you can have positive expectancy, so that you know that over a sample trade you're going to be fine. But again, that need to avoid a loss allows us to have a lack of objectivity, and sometimes it affects our bias about the market because we're trying to avoid a loss. You have to be objective. You have to know the time in the market. You got to know when to take the setup, when to say no to a setup. That's why you have to have that clear criteria for every trade, and understand the context of the market and understand the context of your setup in the current market today. All of that really stems from that loss aversion and allowing ourselves to cloud our judgment based upon the fear of loss and not wanting to take a loss. I want to thank you guys as usual. Make sure you comment, like, and subscribe, and check out everything we have. We do have our new video up on our You Make the Call stock channel talking about Apple. Check that out. And you know about our resources. We have our mentor sessions, and we have our managed forex accounts. And if you're looking for signals, we have that too. But the most important thing is to have a clear vision for what you want to be as a trader, develop a trader's mindset so that you can enact and not be afraid to lose, but more importantly, have documented proof so that you can have a positive expectancy. Thanks, guys, and I'll see you next time.